Michael Burry has loaded up on Bookings Holdings and has made it his second largest position. So the question is, in this environment, should we be following him into Booking Holdings? That's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, if you're one of the cats that watches this channel, drop a meow in the chat. You're watching More Money? Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And this one's a very interesting one because I actually started valuing Booking Holdings Group, and then I started sort of looking around to see who might be purchasing this name, and a very famous name came up, which was Michael Burry. And so I looked at his portfolio and I saw that this is his second largest holding, which I thought was very interesting because I was looking at making a little bit of a position in this company as well. And so I'll just take you there right now. So you can see here that Michael Burry actually has 11.3% of his portfolio in Booking Holdings Group. Now remember, this is just his publicly disclosed portfolio. This may not and likely is not his whole portfolio. You can see that the portfolio value is only $165 million. I'm sure that Scion Asset Management manages much more money than that, but it just looks like from his publicly disclosed listed holdings, this is his second largest position. And I even actually found an article about this. They said that it seems that Burry is betting on a shift away from consumer goods towards experiences. And we can all see that because we've kind of been cooped up at home for a couple of years now. And so everybody wants to get out on vacation this year. Also, the US dollar is on parity with the euro right now. And so you can actually get a cheaper travel internationally if you really wanted to do that. And so it makes a lot of sense that people would want to make that jump. I know people who've already gone on 2 or 3 cruises since sort of things have opened up. So people are really, really hungry to spend that cash that they've saved up a little bit. And so the first question is, what exactly does Bookings Holdings do? Well, you'll be very familiar with many of their brands. You can see here that they own Booking.com, they own Priceline, they own Kayak, and they own OpenTable, Agata, and RentalCars.com. So you guys are probably familiar with Booking.com, Priceline, Kayak, and OpenTable. You might not necessarily be familiar with RentalCars.com or Agata, and that's fine. And where do they stack up in the industry? Well, you can see that the online sort of booking industry, I believe, is a duopoly. Bookings and Expedia own about 95% of what I would say is the consumer mind share of the market. Because can you really think of sites other than sort of like Expedia or Priceline or Booking.com to sort of like book trips? There aren't that many. And so I actually highlighted the sites that I use, and I found that I'm more of an Expedia customer because I actually use Expedia.com, or I use Hotels.com to book hotels, or when it comes to booking restaurants, I use OpenTable. And so I tend to fall on the Expedia side, but you guys let me know where you fall. Like, do you fall more on the Expedia brand side, or do you fall more on the Booking Holdings brand side? And just to dive a little bit deeper into their brands, so Bookings.com and Rentals.com, those are just leading brands for booking online accommodations for reservations, so either rooms or cars, and so we get that. Priceline is a discount travel reservation business. I think we're all pretty much familiar with Priceline. The one that you might not necessarily be familiar with is Agata. That's an online accommodation reservation service catering primarily to customers in the Asia Pacific region. You guys probably know Kayak. Kayak is a one-stop sort of shop. You've seen those ads, right? So you shop once, it compares all the vendors, and then you select one. And so it's sort of like a one-stop shop place. OpenTable, just booking restaurant reservations. In fact, when you go on websites, if you want to book a time, it'll generally send you to OpenTable to book that sort of reservation time. And so how exactly do they make their money? Well, it's important to understand this. So they have the big two, which as I call it, they have agency revenues and merchant revenues. So agency revenues is effectively the customer books with sort of like a travel service provider. And after the travel is completed, the company will receive a commission for booking that travel. And then the other one is merchant revenues. Here's where they act more like a merchant. Here's where they interact or charge the customer directly. So merchant revenues include travel reservations, commissions, and transactions, and they generate the revenue at the time of the booking, because of course people have to pay when they book. So of course the better revenue and the more higher quality revenue is the merchant revenues, because you don't have this sort of like waiting game to get paid. You get paid right away as soon as the travel is booked. So I don't think it really matters. I think they want to attack both markets, because at the end of the day, they're selling the services themselves, but they're also sort of helping travel companies as well sell the products and taking a commission on that. So at the end of the day, probably serving both makes a lot of sense. Now, how have revenues really worked with the company? Well, you can imagine that these brands have been all around for a long time. And so you can see that agency revenues is sort of their bread and butter. That's been the biggest part of their business. And 2017, 2018, 2019, revenues were pretty steady. And then, of course, we went into the COVID situation and revenues collapsed. And revenues rebounded a little bit in 2021, and they're expected to really rebound in 2022. And so COVID once again caused real swings in earnings. And so how am I sort of forecasting this out? Well, you can see here that I'm forecasting out sort of like mid double digits for 2023 and 2024. Now, that can get really impacted by a consumer-led recession, so be careful of that forecast. And then thereafter, I'm forecasting sort of like mid single digit growth. And so I tend to be a little bit more pessimistic. And so I am forecasting future earnings to grow slower than the analysts, but I still believe that I'm giving them healthy expectations. And in fact, I could potentially be giving them much healthier expectations in 2023 and 2024 than I should be, considering the fact that we could potentially be going into a consumer-led recession, and it could last for a couple of years. And so the first question is, if we are entering a consumer-led recession, the first thing I like to look at is how healthy is the balance sheet. So you can see here that they have a healthy balance sheet actually, with a net cash position. And that really helps them, especially with their valuation, which you can see here. So you can see that the continued share price decline is making bookings cheaper. And I'm looking at it at approximately 50% of its intrinsic value. And so this valuation really shows you why Burry is interested in the name. But just using a low terminal multiple, which I think is 20 times earning, I think that's kind of on the low side. I'm still valuing them at approximately $2,700 per share. And you can see that that excess cash sort of adds into here, that $54 of excess cash sort of builds up into the valuation. The current share price is $1,770. So the current market cap to valuation is 65%, or it's trading at 21 times earnings. So once again, I think that multiple might be a little bit low. You might want to use a 25 times multiple just because you could get double-digit near-term earnings growth. And that's kind of what the analysts are predicting anyway. So it's not just me that's predicting that. But what exactly are the analysts predicting about sort of like the 1 year target price? Well, you can see here that the 1 year analyst price target is actually around my intrinsic value of $2,700 per share. So that's very interesting. Now, if you want access to my model for booking holdings, you can actually get access to that model and all the other models that the Patreons get access to at the lower tier of the Patreon. And if you want to join us for an epic live presentation where I save my very best work for, you can get access to that at the higher tier of the Patreon membership. Now, once again, like I always say, there's never any risk to you, because if you do decide to try it out and you decide that it's not for you, no problem. I'll fully refund that first month's subscription, so you feel no financial pain at all. That's how much I believe in the product. Now, one interesting thing about Michael Burry is that I found it very interesting that he's investing in a consumer focused industry like travel, because he is also predicting an economic collapse. And in fact, he even went one step further and is predicting sort of like a bullwhip effect. And I actually covered that in a video right here.